Good morning, I am Janani. I am from Nagarkoil. I have completed PhD in Commerce. I am here to teach about accountancy. Before starting accountancy, I will give a brief introduction about it. Accountancy was first introduced by Lucio Pacioli. Lucio Pacioli is the father of accountancy. He introduced in 1494 through double entry accounting. Next, we are talking about the definition of accountancy. Accounting is consists of identifying, recording, classifying, summary, interpreting, and communicating the information. It identifies accounting. It records the day-to-day transaction. It classifies about whether it's debit or credit. It summarizes properly the daily entries and interpreting and communicating the information. The financial transaction of accounting are recording such as owners, government, investors and creditors. It provides the following information such as resources available in the firm, what are the resources available in the firm, the means employer to finance the resources, the result achieved by those resources. The main objective of accounting is to keep the systematic record of all financial transactions. It helps in keeping the systematic record of all financial transactions properly. That is, the day-to-day transactions are recorded properly in the accounting. To determine the profit and loss of the business. It helps in determining the day-to-day transaction of the profit and loss of business. Next, to determine the financial position prepared by the balance sheet. The balance sheet helps to determine the financial position of the business, such as debtors and creditors. I'll repeat only. The main objective of accounting is to keep the systematic record of all financial transactions properly, to determine the profit and loss of a business. Third, to determine the financial position by preparing a balance sheet. The golden rules of accounting. It is important in accounting. To start any topic in accountancy, the main thing to know is about the golden rules of accounting. This helps in knowing about the financial transaction properly. Even in balance sheet and profit and loss account, the main rule is to know about the golden rules of accounting. The first golden rules of accounting is debit the receiver, credit the giver. Receiver receives the debit and creditor receives the giver. Next, debit what comes in, credit what goes out. Profit, debit means profit what comes in and credit what goes out. Debit all expenses and losses, credit all income and gain. The day-to expenses and losses comes in the debit side and the right side, and the income and gain comes in the credit side. That is in the left side. Next, the 5 types of accounts. Next is the 5. How much types of accounts are available? They are the asset, liabilities, equity, revenue and expenditure. Asset is a firm which we get it. Liability is about debt or loan. Equity, the profitability which we gain is called equity. Revenue and expenditure. What we spend is said to be the revenue. What we gain is said to be the revenue. Expenditure said to be what are the losses available or how much you buy extra comes in the expenditure. Purpose. The main purpose is the performance of financial condition of the business. It helps in mainly knowing about the financial condition, either it's a loss or profit. Everything comes in it's known about the performance is known as a information used to make business decision. The information used to make the business decision about the financial condition of a business. Use of accounting information.